Right, good morning then everyone as you head into European trade on Tuesday the 28th of November. We'll flick across the headlines, the articles, see what's going on a relatively quiet morning across the board in financial markets. Now you're going to see this stuff taking hold. Dollar slips to multi-month lows as traders eye PCE data. Asian stocks subdued as traders brace for inflation data. And that's what you're probably going to read between now and Thursday. So US inflation on Thursday is PCE, not CPI, but PCE is the Fed's preferred metric of inflation. So we will obviously cross that bridge when it comes to it on Thursday. But for now, you are probably likely to read all that stuff over the course of the week. Oil prices rise on weak dollar expectations for OPEC plus output cuts. Yesterday morning, oil was down a little bit, and then it was talking about maybe not getting OPEC output cuts, and then Friday it was the opposite, and then it just keeps chopping and changing. So they kind of write these articles sometimes you got to be careful with these articles. They kind of write them sometimes just to find something to suit the narrative, but at the end of the day you've got to wait for the actual move to happen, and if it's just chopping sideways, well, that kind of tells you all you need to know about these types of articles. But apart from that, I'm talking about cryptocurrencies, Japanese business lobby, soft China and India may undermine goals, rally hopes, all kind of opinionated pieces on random different things. But at the end of the day, there's not much in the way of moving markets at the moment. That's what they're looking ahead to inflation. And I mean, you can see they're putting cryptocurrencies in the FX, one of the top articles in the FX news headlines. That kind of tells you all you need to know, I think. And then you come across the markets and you can see just pretty much a bit of choppiness across the board. Bit of downside in European stocks to start the day, but the most amount any of these are down is minus 0.2%, so it's not exactly not exactly that much. But yesterday we did see some downside in European stocks, which we will we'll have a look at when we get around to some markets. We were looking at a bit of a head and shoulders on the DAX yesterday that thankfully managed to play out. US stocks choppy, Asia Pacific stocks choppy. Oil slightly higher. The article back there was talking about being higher. It's 0.1% higher, so I'm not going to read too much into that. Commodities across the board pretty mixed and not up or down by any sort of massive percentages. Bonds, the same thing. You can see the mix. The US dollar is mixed. Your Aussie, Kiwi, Euro, Swiss are all mixed. Japanese yen, a bit of strength in that. Solid downside yesterday in US yields, which is supportive for the Japanese yen, obviously for reasons we've talked about before. Kiwi down a little bit as we head into the RBNZ later on tonight or tomorrow morning, whichever way you want to put it. As you can see then, RBNZ interest rate decision. All 28 economists polled by Reuters over the last couple of days have all agreed with that. No hike. That'll be 4 straight meetings in a row with no hike, and you'll be waiting for their projections, their official cash rate they call it, which is their interest rate. They call it the OCR, the official cash rate. Be looking for where the RBNZ see that at different points next year. Do they see cuts in next year? If they do see cuts in next year, when do they see them coming? So that will be what we need to keep an eye on, is the future projections. Not really so much to do with anything that is happening right now. They've got a press conference to the companies that an hour later, so any sort of kind of talk about interest rate cuts, or do they bring forward maybe even towards the middle or even first half of next year, do they suggest they're going to get a cut early next year, or do they push back on that and say no, higher for longer, keep that sort of narrative? So that's what we need to look out for with the RBNZ a little bit later on this evening. In terms of economic data, there's not a great deal out over the course of today. We did see a couple of prints, the kind of medium impact prints. We were looking at new home sales in the US down below consensus. New home sales month over month minus 5.6%. There's Fed manufacturing index, or the Dallas Fed manufacturing index, which is obviously a manufacturing index from the Dallas Fed, that is below previous. So again, accelerating to the downside. Just 3-week data prints. Okay, they're medium impact data, but at the end of the day, that's what we were looking for yesterday, and we're looking for any weak economic data from the US cause a fresh round of selling in the US dollar, which it did cause a fresh round, well, I say selling in yields, but buying of bonds, yields lower pretty aggressively in yesterday's session. And have a look at the US dollar, where your Aussie, Kiwi, Euro and Sterling made another attempt higher. Dollar Swiss, dollar CAD made an attempt lower, and dollar yen continues its move lower. Now, the fact that you saw such aggressive downside in yields is the most impactful on dollar yen, with the Japanese interest rate being anchored bit with the 10-year yield being below 1% and the actual interest rate minus 0.1%. It is susceptible to any move in yields. Therefore, yields aggressively lower means the Japanese or dollar yen lower, which is obviously the Japanese yen then higher. So dollar weakness again continued over the course of yesterday and a little bit overnight across some of these pairs. Is having a bit of a pullback now, but that is to be expected. That's what we were looking at in yesterday's session. But stocks weren't having a good time of it yesterday. They were just chopping about. It was still sort of a bit of a holiday in the US yesterday. But you see the S&P, the Dow Jones, and Nasdaq, and the Russell, not sure where they want to go. The DAX, though, you had your head and shoulders on the DAX, which we were looking at yesterday, got through the neckline. Now we're accelerating to the downside. You see the moves across these hourly candles so far. It's posting solid downside candles across the board, across the 4 US stock indexes, the DAX, the Euro stock, and the FTSE as well. It's not like we've seen much in the way of economic data, too much in the way of economic data this morning. You got this consumer confidence figure out of Germany this morning, what, minus 27.8. It's a little bit better than consensus, but obviously still a negative print nonetheless, but a little bit better than previous, a little bit better than consensus. And that's the reaction in stocks, which started at 7 o'clock. So it's an interesting move. Maybe a little bit of a difficult one to piece together just at the moment, but we'll await and see any information that we can a little bit later on. But got to stay on that side of things. I think short dollars the way to go, especially if yields continue lower, which they look like they want to. I mean, short dollars, stocks seem somewhat under pressure, which may get in the way of a bit of US dollar weakness. But economic data today from the US, got some more home price figures, some consumer confidence figures, that if you can't get them weak again, that's further downside, or should be further downside on the US dollar. So still stick to what we said yesterday. It's probably the right side of markets to stay on. Stock move a little bit downside in stocks is certainly one to keep an eye on. You're saying, I said yesterday again as well, they had such an aggressive run over the month of November. It looked like they were topping out. Maybe with a downside in stocks wouldn't be too unsurprising. But when you're talking about interest rate cuts, or the narrative of markets is interest rate cuts, a little bit different for hikes. But when the narrative market is interest rate cuts, it is always an easier trade on the currency. As I said yesterday, the reason why central banks cut interest rates is because of upcoming or immediate negative business conditions, which is not good for stocks. But stocks like interest rate cuts, it's just flat out bearish for the currency. So always a little bit of an easier trade on the currency. But still stick to what I said yesterday. Probably the same side of markets to stay on today. Best of luck if you go and try and trade it.